Good morning, everyone. So, without taking too much time, I'm really just framing higher prices right now. I believe that 830 could be forming a little bit of a Judas swing. We're could be making that 2022 model. I noticed how like Nasdaq failed to really run lower past these. It disrupted this trend a little bit. But if you look at the Dow, we are underneath these lows. So the Dow's kind of leading lower right now, showing a bit of divergence to the upside, and Nasdaq seems to want to lead higher. If we manipulate this morning and 930 kind of expands off this 15-minute fair value gap and brings it up above the midnight open, above these relative equal highs, that's what I would kind of want to see for sort of manipulation. We would then I would then be watching these fair value gaps on inverse fair value gaps on the daily chart to resist price. So I don't know if it's gonna get all the way up there, but nice watching these levels. Right now there's in that 1 minute chart, there's this large fair value gap I want to see a trade into. If it doesn't have to reach into it, to be honest, but if it does, I would be very want to be bullish inside of that. There's also this inverse fair value gap, which is kind of like the first one you want to look at to support price, and it did support it. But simply the risk reward is something I don't know if I was too comfortable with it. It's a little high up into the range, but targeting, we could target like 20 points to run out that high maybe. I think that's doable. So I might try it on my top step. So I went long right at that consequent encroachment at 14 and a half. Those right there. So we have our 15-minute PD array. We have the 5-minute short-term low that got run out. And then the 1-minute entry. And we should see these 5-minute candles only see, we don't want the low end to be broken after this run down to that low. And so we should continue to see expansions and higher closing 5-minute candles breaking through these highs right towards the midnight open. want to see a burst of volatility real quick here to follow up on that wick. I'm still in that position. I want to see if I can hold it to 30 points. I might close it if it starts to stall and retrace a little bit. I want to kind of see this real quick run through these relative equal highs. Oftentimes when we get to this point here, I'm like, I see this sort of profit, I'm up, and before, to me it's like, wow, imagine if I lose all of it. But then quickly I end up thinking, what if we were still at break even? Would I want to cut the trade? Like this, it's not so bad if we go back to break even, because it's better than a loss. And like, even though I have money up right now, I'm thinking about the money when I'm thinking about closing the trade here. Like, I have a clear idea that it's going to expand here. It's going to run up, and I'm not scared of holding on to it much. But like, I have to remind myself that, because before, and oftentimes, I do get scared seeing that profit up like $500, and I'm just like, should I take profit? Should I not? And then it comes back on me, and I think it's the end of the world, when it's better than going back and then closing it at about $300 is better than losing. It's a good thing that I made profit. So my stop is up at $310. So it's around here, around that fair value gap. I want to just see it quickly run up to that 600. It's right there, and then I will close the trade for that 30 points. Almost there. It's gonna tease me a little bit. There you go. So that let me show the executions. This was the trade. Right now, what I'm gonna do here is I'm gonna pretend like I was still in that trade, and I was holding on to it, because the idea is that we run through these relative equal highs all the way to midnight open, right? There is that fair value gap too, which was a breakaway gap that I was also watching, because these highs, you have to think, where's the next spot that we can start to see a bit of resistance. It would be the breakaway gap. That's also balanced and inefficient. But I would pretend like I'm still on the trade, right? So how would I feel here as it's coming back now? Would I be scared of it retracing on me, of seeing the profit that I'm up by tick away and go back down to a balance that's lower? Like, would this candle scare me out of a trade? And if it does, you need to look at the higher time frame and what it's doing in the higher time frame. Remember that the idea is that we're waking from this gap. Like, does this look bearish at all in the 15-minute? It doesn't. It doesn't look bearish at all. And so even though it's retracing a little bit, you can't let that scare you out of your longs, of your ideas, just because a smaller time frame is retracing it. The larger time frames are just as fast as the lower time frames. It's no different. They move just as fast. It's just that the perception is different, because it's from a different perspective. oftentimes when you take your time and look at things from the bigger perspective, you kind of understand that, hey, this is the right idea, this is the right frame of mind. I can't get worried about one down close candle. Now, I'll be honest, that would definitely scare me out of the play. The fact that it's consolidating and it just does this, especially 9:30 open too. It's I would definitely have always looking to take partials before 9:30 open, unless I'm like 110% sure that the only thing 9:30 open can do is expand, but it's already at a premium a little bit. So what could happen is 9:30 maybe retraces back down into the inverse fair value gap or into this large fair value gap and shows a bit of drawdown, and I would not like, it would not be good for my mental at that point. So having a break even stop here, or that stop up at positive $300, right? How I moved my stop up from down here all the way to around here for a guaranteed 15 points. Yeah, I did that in case something like this happens, to protect my mental equity from worrying about losing a trade, that was just up on by a lot more than what I usually get, for my average loss. So I guaranteed a 1-to-1 RR is what I'm saying. And when you double that, when you add to 2 RR, and you're like, okay, well, and you're still holding on to it, you want to at least make sure you have something, because it's the mental equity doesn't, it's harder to build mental equity and to regain mental equity than it is for monetary equity. I lost $900 yesterday on this top step challenge, and now I just made back 2/3 of that in one trade. In how many minutes? In 5 minutes. The next day. So I know that I'm able to make that back very easily. My mental equity is something different, because I can't really see that, and it's something that takes a lot of experience, honestly, years of life, to be able to track and to know exactly how to treat that mental equity. That honestly, I think I'm just too young and too inexperienced to really teach on or talk about, but I hope that I'm at least hitting the right points. At the end of the day, this is what I think, and anyone's free to disagree or talk about it, comment about it, what they think. But I don't know. Makes sense to me at least. And I still think that these highs will get run out. We're ultimately going to go back to midnight open. So we're watching a minute and a half here. See if it's going to rage up higher. I'm studying those bodies. Honestly, it's a waste of time right now on this 1 minute chart. Because it's just 9:30 open's gonna move so violently. You really just want to focus on the higher time frame here, and that entry is a bit of a premium for that. So, remember your premium to discount. That's why it actually didn't even get the discount. But if you don't consider the wicks, then yes, it did get the discount because this wick is 8:30 news. I would look at the low of the day and the high of the day, and then look at that discount because that's the daily range. Or we can use that one there. And so, from a daily perspective, anything underneath this 50% is the dealing range that took buy side and sell side. We're trading within this dealing range, so anything beneath that is higher probability. That's a real discount, in my opinion. So, this fair value gap is of special interest to me because of this. you take a look at the S&P, Dow, still looking a bit lower. Gold has been dropping significantly the past couple of days, and Bitcoin too. So that could kind of signify that. Well, I'm seeing those relative equal highs too, to be honest. So I think we're gonna come back and visit up there, but ultimately I think we're still in that consolidation. But usually when gold rises, there's a lot of panic, and you're more likely to see a sell-off in high risk markets because gold is rising. So when gold is going lower, it doesn't mean that high risk assets are going to go up, but this could just mean that money is flowing from safe assets back to high risk assets, and it could just put bullish pressure on high risk assets or maybe bonds, which is also safe, but it's also cash. So money could be flowing from gold into bonds. It could be flowing to anything really. It's usually significant when gold is trending because usually it just consolidates. This is the dollar too. Like I've had a bullish bias on the dollar, but it's been very hard ever since we kind of hit that sell side liquidity. But it's been very hard to see that large range up close day. I mean, we keep having this up close candle, down close candle, up close candle, down close candle, and back to up close candle. It's very challenging right now for that dollar to continue rising. And I don't know why I don't like it when stuff appears on my chart like that. What was I gonna? Oh yeah, no, I was gonna go down to the hourly chart. But yeah, right now the dollar is trending, so I can expect it to run up to all these relative equal highs and clean that up today, which would be harder for indices to actually go higher. Really, now that I think about it like that. Now right here I'd be liking the longs. I'd want price to be really quick to rebalance this range. I'm not willing to long on it yet because we are showing a lot of downwards pressure and the dollar is going higher, so it's very risky to long here. It'd be two-sided really, or very choppy. But ideally, if it really wants to go higher, just by looking at the Nasdaq alone, it should just splice right through that range very quickly, leave long candles, and sort of like almost immediately rebalance this range and leave a big wick on that 15-minute chart. Then I'd want to see the body sort of respect that fair value gap, and just all it was doing is dip back down here one more time. And the Dow is actually higher, so we're gonna see if it ends up agreeing to go lower, and if it does start to go lower and create these order blocks, then I would expect lower prices, and any ideas to go long fail. Or sorry, fail. we're still going to look at it from the 15-minute perspective. Let me put there you go. No, Thursday. GDP growth rate forecast 2%, 2.8%. Okay, that's actually, see, like, I track these things. I'm actually have an interest for these economic news and stuff. And a lot of people were telling me, the Fed are gonna cut rates, Leo. I even have a bet going on that if the Fed cut the rates in September, that I have to put a Federal Reserve sticker, "I love the Fed," on my car, right, the bumper of my car. And the other, if I win the bet and they don't cut, and I have to do that until they stop cutting. And then if they don't cut, then my friend needs to put "uneducated economist" sticker on the bumper of his car until they start to cut, which could be in a very long time. So like I'm in the position where they won't cut, right? But a lot of people are telling me that, oh, unemployment's going to start to go up. Rates can't be this high. They're too restrictive. And I'm saying no, because the fact that people believe that there's such a high chance that the rates, or not even chance at this point, people believe like there is no chance they don't come down. There's like an 88.2% chance they come down, is what the media said. It's just what the media is saying. It's propaganda. See, the fact that people believe rates will come down gives people that belief, or that incentive to go out and spend money and do business decisions as if the rates will actually come down. And so that helps the Federal Reserve keep their rates higher by pushing inflation up. And so, they, just by talking about cutting the rates, they get that effect that they would want cutting the rates. So that's like this bet I have going on. And this morning, what do we see? GDP coming out much, much stronger than expected, shocking the whole market. You're going to start to see questions about rate cuts in the coming weeks, because the economic data is not saying that we need a rate cut, yet the rates are still so high and everyone's confused. Now, right now, we inverse this gap here, which is, there's no other gap in that range that's nice and wide like that one at 932 there. And we have these fair value gaps down here. We also have the 15-minute fair value gap, which we closed. In fact, we may actually close above it, right? So there's nothing, I wouldn't be going long because of that 5 minute bearish fair value gap. So it'd be a bit scary to long here, but it's very two-sided right now. If I had to put my chips on the table, I would say it's gonna go higher, and I would just be kind of betting on that. But it would be betting nonetheless, right? Like, yeah, I'm focusing on the daily chart and saying, okay, well, we left this huge down close day today. We've traded beneath this low there at 19,192 and a quarter, and we're inside this daily fair value gap, and there's potentially an order block there. I see a lot of support, and it's possible that we form a short-term low, and on the hourly chart we have relative equal highs. We're beneath the midnight open, we're in a discount for the day's range, so like we could be seeing, I'm not saying we will, but we could be seeing a run higher. It's hard to like say that we will see that and then execute on it because of how bearish we've been. We're clearly in higher time frame order flow that's bearish. So like the best thing you could do is try and catch the top or predict the top. I'm not convinced that we've put in a top yet, so I'm not gonna try and short until we get up above that midnight open, and we clearly show that we manipulated in one direction. But so far we're just kind of moving sideways. There's nothing clear or convincing me of one direction or the other that would lead me to feel comfortable placing a trade. Alright, so it's approaching that 10 o'clock hour. I'm gonna give it that 10 more minutes to move around, but 9:30 opened up. Seems like this could be that manipulation lower. Like I would still only be wanting to frame those longs, like nothing has changed. But I'm gonna give it a bit of time, just kind of move around, do whatever. So I want to. I'll do that later. Dow is obviously not agreeing with the Nasdaq, and like I said before, this is the summer, and so this will happen oftentimes in summer where these things won't agree. And that just means low probability conditions. So do you want to place a trade in this? No, I don't. I'd rather just wait till they agree, and it's not today. But anyways, seeing that they're clearly not in agreement, I'm just gonna cycle through all the other markets one more time. Dollar's still going higher. The Bitcoin going lower. Okay. Gold going lower. Bonds starting to go higher a little bit. Well, that's it for today. Just done for now. Oh, before I end it, I was gonna test something. I wanna just try placing a trade and then seeing if you can hear the noise, the sound it plays. So see if you hear that. I just for me, I want to test it. I'm not sure if it'll actually play. If I have to keep updating it.